Hey everyone, welcome back to Alpha Insights. I'm Kristen, bringing the caffeine and the charts. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
And I'm Allison, ready to dig in. Quick note before we start. U.S. markets are closed today, so we're talking about the regulatory news and what it means heading into the long weekend. Last trading day was Friday, May 22nd, and the next session is Tuesday, May 26th.
Okay, so here's the headline in plain English. Late in April, the Drug Enforcement Administration shifted a narrow slice of marijuana into Schedule 3. But the bigger thing? They set an administrative hearing for June 29th to consider broader rescheduling. That hearing is what everyone is circling.
Right, and it's important to stress, this is not legalization. The change covers FDA-approved marijuana drugs and marijuana that falls under a qualifying state medical license. Recreational adult use cannabis, which is where most state revenue comes from, stays in Schedule 1 for now.
Exactly. So the law shifted a sliver of activity into Schedule 3. Think accepted medical use, lower abuse potential. But the plant-touching adult use business, still federally off limits. That distinction is the whole deal when you start talking about listings and access to capital. Let's walk through the listing math because people get excited and then skip the details. Exchanges require that a company's current and planned activities don't violate federal law. Schedule 1 was an automatic disqualifier for plant-touching businesses. Move to Schedule 3, and suddenly some operators can make a federal law-compliant case.
But, and this is a big but, the exchange is only step 1. Even if an issuer is legally in the clear, underwriters, auditors, transfer agents, custodians, and banks all has to be comfortable. Each has its own regulator and risk committee, so rescheduling changes the classification, not everybody's risk appetite overnight.
Yeah, you can't just flip a switch and have every bank and brokerage wave you through. The plumbing has to be rewired, and that usually takes longer than headlines suggest.
Exactly. And here's where company profiles matter. Operators that are concentrated in state medical markets, with clean audits and simple capital structures, have a lot more to say to an exchange than a multi-state operator whose revenue is mostly adult use.
So if you squint at the math, companies that already run like public companies, audited financials, clean cap tables, fewer legal knots, are the ones poised to benefit first if the door opens wider. The rest? They'll probably react, not lead.
Right.
Then there's the rumor mill. People are talking about potential federal guidance on tax treatment and an uplisting pathway landing soon. Treat that as noise until it's confirmed. It's unverified chatter right now.
Yeah, and there's precedent for guidance after policy moves. After the earlier reforms, financial regulators put out guidance that shaped how banks handled cannabis for years. So it's plausible regulators could issue interpretive guidance after rescheduling. Treasury, the IRS, FinCEN, but timing is unknown.
The big tax question is Section 280E. If rescheduling triggers relief there, the earnings math for profitable plant-touching companies would change a lot, immediately and materially. But again, that's a conditional if and not a done deal.
Totally. So the smart framing we keep hearing is, trade the hearing, not the whisper. Watch June 29th. Treat the rumor as background noise, unless something official drops.
Let's talk names without saying, buy this. Just what the market is watching. The Advisor Shares Pure U.S. Cannabis ETF is the sector pulse. It moves with regulatory headlines and carries the basket risk of multi-state operators. Then you have individual operators with different profiles. Trulieve is heavy on medical markets and cash generation. Green Thumb is known for consistent profitability and disciplined capital management. Curaleaf is a scale play with big revenue but more adult use exposure.
And that's the theme. Rescheduling rewards the prepared. Operators with audited books, simplified capital structures, and a defensible, compliant activity story are better positioned to act when a window opens. The rest have to clean house first. Interesting.
A couple of quick practical takeaways. 1. Rescheduling to Schedule 3 and the June 29th hearing are real catalysts. 2. Rescheduling is not a one-step unlock. Exchanges, banks, auditors, and regulators need to move in sequence. 3. Don't treat unverified guidance as a certainty. Use confirmed actions to reset expectations.
And remember, we can't give personalized investment advice. Analysts note these are potential structural changes, and data suggests some operators would benefit more than others. This is informational only. Do your own research and consider risk carefully.
All right, let's wrap it up. Summing up together. The DEA's April move opened a narrow door. June 29th is the date to watch, and the market should reward companies that are operationally ready, not just hopeful.
Got questions? We'd love to hear from you. Head over to stockalpha.ai, where you can ask us anything and we'll answer live. And while you're there, check out more market content and our Q&A feature.
Thanks for listening. We'll be back with more Alpha Insights after the hearing. Stay curious and enjoy the long weekend.